Welcome, everyone, to another deep dive.
Great to be here.
Today, we're really getting under the hood of Eicher Motors Ltd. We're looking at their Q1 FY26 financial results.
That's right. And our goal really is to cut through the usual corporate speak. We want to pull out the key insights, maybe even some surprising bits.
Exactly. We're looking at their official board meeting info, those detailed investor presentations, press releases, kind of the whole picture.
Yeah, pulling it all together to see what's really going on.
And the big headline, the thing that jumps out right away. Eicher Motors is reporting its best ever first quarter revenue from operations, EBITDA, and profit after tax.
Which is, quite a statement to start with. Sets a very positive tone.
It really does.
Okay.
So let's start unpacking that. What do the consolidated numbers actually look like for Q1 ending June 30th?
Okay, so consolidated, looking at the whole company. That best ever claim, it holds up. Revenue from operations was 5,042 crores.
5,042 crores. And how does that compare?
That's the striking part. It's up almost 15%, 14.8% to be exact, compared to the same quarter last year, which is about 4,393 crores.
Right. Nearly 15% growth in revenue year on year for Q1. That's strong.
Very strong top-line growth. It really sets the pace.
But, growth can sometimes squeeze profits. How did they do on EBITDA and the actual bottom line, the profit after tax?
Good question. So EBITDA came in at 1,203 crores. That's up 3.2% from EBITDA 165 crores last year.
Okay, so slower growth in revenue, but still positive.
Still positive, yeah. And profit after tax, or PAT, that was 12,205 crores. And that's up a pretty healthy 9.4% from EBITDA 101 crores last year.
9.4% APT growth. So they are managing to translate a good chunk of that extra revenue into profit. Seems efficient.
Exactly. It suggests healthy operations, good margin management.
Now, I saw a note about the auditors giving an unmodified conclusion to the results. For those of us not deep in accounting, what does unmodified really signal here?
Right. Think of it as basically the best possible outcome from an audit review. It means the auditors looked at the numbers, the standalone and the consolidated ones, and said, yep, these look fair. They're presented correctly according to the accounting standards. That's a big stamp of approval.
So it boosts confidence in the figures we're discussing.
Absolutely. For you, the listener, it means you can rely on these numbers with a high degree of confidence. It's the auditors saying everything looks sound.
Got it. That's helpful. I also noticed something about other income getting a boost from a dividend from VECV.
Yes, that's quite significant this quarter. Other income included 217.60 crores as a dividend from VE Commercial Vehicles, their joint venture.
And that's up from last year.
Way up. It was 136.00 crores in Q1 last year, so quite a jump.
What does that tell us?
It really highlights how well VECV itself is doing. Its strong performance and profitability flowed directly back to Eicher Motors' bottom line, adding another layer of financial strength and diversification.
Okay. Now, looking ahead slightly, there are these new end-of-life vehicle rules, the ELV rules, that started April 1st. They bring in extended producer responsibility, or EPR. What's the situation there for Eicher?
Right, the ELV rules. This basically means manufacturers like Eicher are now responsible for what happens to their vehicles at the very end of their life cycle, disposal, recycling, all that.
Which sounds like a potential cost, right?
It is. It's a new obligation. But here's the thing. Eicher stated they're currently unable to reliably estimate its obligation.
Why is that?
Because the system to actually manage the centralized online portal for companies to register, and more importantly, the pricing mechanisms for how much this responsibility will cost that infrastructure isn't operational yet.
Okay, so they know it's coming, but they can't put a specific number on it in their books just yet?
Precisely. It's a known unknown, financially speaking, for now.
So let's step back. We've got these best ever Q1 numbers, solid profit growth, good signs from the auditors, a boost from VECV. What's the big picture takeaway for Eicher's direction and stability?
I think it signals really strong momentum. It's not just one good quarter. Hitting records across revenue, EBITDA, and PAT suggests they're executing well. Their products are clearly in demand.
Right.
And strategically, they seem to be firing on all cylinders. For you listening, it suggests a company that's built a really solid foundation and isn't just maintaining, but actually accelerating. It bodes well for the rest of the fiscal year.
Okay, that makes sense. That financial performance definitely points to exciting things happening with the products themselves. And for Eicher, the first thing many think of is Royal Enfield. How did the bikes do?
Royal Enfield had a fantastic quarter, really backing up those overall numbers. They sold, get this, 261,326 motorcycles in Q1.
Wow, over 250,000 bikes.
Yeah, and that's up 14.7% from the 227,736 they sold in the same period last year.
So mirroring that overall revenue growth rate pretty closely.
Exactly. It shows very strong demand, good execution on getting bikes out there.
And we know they dominate the mid-size segment in India. I saw a figure something like 87% market share.
Yeah, 87.3% as of June 2025. Well, it's massive dominance in that specific category.
Incredible. What's the challenge when you're that dominant? Is it just holding on, or is there still room to grow there?
It's a bit of both, I think. The challenge is maintaining that edge, keeping customers loyal, especially as new competitors try to chip away. But there's always opportunity in, improving the customer experience, dealer satisfaction.
And they seem to be doing well there. I saw a mention of a FEDA survey.
Right. They ranked #2 in the FEDA Dealer Satisfaction Survey for 2024. That shows their distribution network, the dealers, are pretty happy, which usually translates to a better customer experience, too. It's a key asset.
Okay, so strong domestically. What about internationally? That always seems like a big growth area for them.
Absolutely. And the reports highlighted, quote, stellar growth in revenues from international business.
The dollar growth, okay.
They're actively gaining market share globally in that midsize segment. Around 9% in Europe, Middle East, Africa, another 9% in Asia Pacific, and about 8% in the Americas.
So it's not just shipping bikes out, it's a real strategy playing out.
Seems like it. They're building the brand, adapting, and it's working. It's a properly executed international expansion, not just an afterthought.
And product-wise, Royal Enfield is great at refreshing things while keeping that core appeal. Anything new this quarter that stood out?
Definitely. The refreshed 2025 Hunter 350 launch was interesting. They unveiled it at this Hunter Hood Street Culture Festival.
Right.
And it wasn't just new colors. They've added things riders ask for. Better comfort, more ground clearance, a slip assist clutch, which is nice LED headlight, the Tripper navigation pod, even Type-C charging.
So modern touches on that classic platform.
Exactly. Still got the J-Series engine, but with useful upgrades. They also launched the Classic 350 over in Nepal, now built locally at their CKD plant there.
Ah, local production. Smart for market access.
Yeah, and that Nepal version gets dual-channel ABS, LED lights, gear indicator, USB-C. So, again, keeping the model fresh and relevant.
It really feels like they're building more than just motorcycles. It's this whole world around the brand, isn't it? The ecosystem.
It absolutely is. That non-motorcycle business parts, service, gear, apparel. They specifically said it's growing in size and reach.
So it's becoming a bigger piece of the pie.
And a strategic one. It builds loyalty, keeps people engaged with the brand even when they aren't buying a new bike. And their new Conscious Collection apparel line.
What's that about?
It's made using recycled cotton, Himalayan grass fiber, organic fabrics, natural dyes, even eco-friendly packaging. Ties into their whole ride green, ride pure idea.
Interesting. Tapping into that sustainability trend.
And appealing to riders who care about that stuff. Yeah.
And then there are the rides themselves. The Himalayan Odyssey sounds epic. 18 days.
Totally. The 21st edition, 77 riders, 2,600 kilometers. That's where the brand magic happens, isn't it?
Yeah.
It's not just marketing. It's building a real community.
Right.
And they do other things, too, like moto camping events, Project Carnatica Tourism, and that collaboration with the Great Frog, the jewelry brand.
Yeah, I saw that. A custom chopper.
A custom Super Meteor 650 chopper, plus a limited edition collection. It just shows how they position themselves culturally beyond just being a bike maker. It's a lifestyle.
And how does this translate into brand perception? Do they have numbers on that?
They do. They're seen as a leading premium motorcycle brand. Get this. 54% top-of-mind awareness in the 200cc plus category.
Half the people think of them first. Wow.
And 85% top two-box consideration, meaning 85% of potential buyers have them in their top two choices. Plus, they claim the world's strongest fully organic social media community, 12.8 million followers.
Organic is key there, not just paid ads.
Exactly. It suggests genuine enthusiasm and connection.
And supporting all this, the sales, the brand there must be a solid manufacturing and R&D setup.
For sure. They've got 4 production plants plus 6 CKD assembly plants around the world. And crucially, the R&D investment.
How much are we talking?
Around 1,900 crores. It's roughly, what, 230 million US dollars? Invested cumulatively over the last 5 years. Spread across their 2 main R&D centers, one in the UK at Brundingthorpe and one in Chennai, India. That's what keeps the new ideas and product improvements coming.
Right. And looking further ahead, electric bikes. It's the big question for every motorcycle brand, especially one like Royal Enfield with such a strong heritage in combustion engines. What's their plan?
Well, they showcase something called the Flying Flea EV brand.
Flying Flea, interesting name.
Yeah, historical reference, I believe.
Yeah.
But the key thing is how they're positioning it. Design first, independent brand vision, and tech-led innovation.
So not just an electric version of a Bullet, maybe.
It sounds like they're aiming for something distinct, creating a separate identity for their electric future rather than just, swapping the engine out of an existing model.
Which could be smart.
Yeah.
Allows them to innovate differently.
Exactly. It signals they're serious about entering the EV space, but want to do it in a uniquely Royal Enfield way, potentially under this new brand vision. It's one to watch.
Definitely. Okay, let's shift gears now from two wheels to, well, many more wheels. VE commercial vehicles, VECV, their joint venture with Volvo. How's that side of the business doing?
VECV is a real pillar for Eicher. It's been a successful JV with Volvo for over 15 years now, focused on modernizing commercial transport in India and other markets.
And their Q1?
Really strong. They sold 21,610 vehicles. That's up 9.7% year on year.
Okay.
And here's the kicker. They mentioned this is the first time they've ever sold over 21,000 units in a Q1.
First time ever for Q1. And how's the overall truck market?
They specifically said they achieved this in a largely flat market.
Ah. So if the market's flat, but their sales are up almost 10%.
It means they're gaining market share. They're outperforming the competition, not just riding a wave of overall growth.
That's significant. And did their financials reflect that strong sales performance?
Absolutely. Revenue for VECV was 5,671 crores, up 11.9%, and EBITDA up a very impressive 32.6% to 211 crores.
Wow, 32% EBITDA growth. That's huge.
Yeah, really strong operational leverage there, and it backs up that market share story. Their overall CV market share climbed to 18.7%, up from 17.3% last year.
Where are they strongest?
They highlighted their continued leadership in LMD trucks, light and medium duty, where they hold a 34.5% share. And buses did well too. Volumes up 14.8%, market share up to 21.5%.
So broad strength across key segments. Any word on exports for VECV?
Yep, exports grew significantly too, up 20.5% compared to last year. So growing both domestically and internationally.
And how are they connecting with all these customers? You hear a lot about connected vehicles these days.
Right. Their solution is called My Eicher. They mentioned it now links 150,000 customers, representing about 350,000 vehicles. That's a huge network for providing data, diagnostics, fleet management support.
And the physical network, service points.
Also expanding. They're now over 1,000 touch points in India, having added 20 new ones just in Q1. So investing in both the digital connection and the physical support structure.
Makes sense. Anything else on the innovation front for VCV?
Well, their Bhopal plant won an innovation award, which is always a good sign. And importantly, they mentioned the deliveries of their all-electric truck, the Eicher Pro X.
Ah, the electric one.
Yeah. In the small commercial vehicle segment, the 2.0 to 3.5 ton category, deliveries are, quote, continuing to gather momentum.
So, like Royal Enfield, VECV is also actively moving into the EV space.
Definitely. It shows they're not just sticking to diesel. They're investing in and delivering electric solutions for the commercial market, too. Crucial for the future.
So bringing it back to Eicher Motors overall, how important is this strong VECV performance to the parent company?
It's incredibly important. It provides really valuable diversification. Eicher isn't just a motorcycle company. It's also a major player in commercial vehicles via VECV.
Right. Spreads the risk.
Exactly. It means they aren't solely dependent on the fortunes of the two-wheeler market. VECV delivers a consistent, significant stream of revenue and profit and operates in a totally different, though related, industry segment. For you, the listener, it means Eicher has this added layer of stability and resilience, multiple growth engines.
That makes a lot of sense. Okay, one more big area to cover, sustainability. It's becoming so central for investors and customers. Eicher has this vision called rebalance. What's that about?
Yeah, rebalance is their term for a long-term strategy that explicitly tries to, well, balance social and commercial goals through sustainability. It's not just a side project. It's framed as core to their vision.
And what does that mean in practice? What are their ESG, environmental, social governance goals?
They've laid out some pretty specific ones. Environmentally, they're targeting things like improving water positivity, using less, recycling more, aiming for zero liquid discharge from plants, eliminating single-use plastics, boosting renewable energy use.
Okay, standard stuff, but important.
and reducing waste, increasing how much of a motorcycle is recyclable. But the big one is emissions. They're targeting an 80% reduction in emission intensity, measured per motorcycle produced, by the fiscal year 2029-30.
80% reduction by 2030, that's ambitious.
Very ambitious. It sets a clear, measurable target for decarbonizing their manufacturing footprint.
Have they actually achieved anything tangible yet, or is it all future goals?
No, they highlighted some key achievements already. They hit zero waste to landfill status across their operations in the last fiscal year, FY23-24.
Zero waste to landfill, that's impressive.
Yeah. They also reached an 84% renewable electricity mix in FY24-25 and reported a 51% reduction in that emission intensity metric already from the previous year. And on water, a net water positivity index of 4.3, meaning they replenish much more water than they consume.
Okay, so these aren't just targets. They're making real progress. Those are solid numbers.
Definitely shows it's more than just talk. These are significant environmental milestones.
And what about the S in ESG, the social side?
They have what they call the Royal Enfield Social Mission. One example they gave was the Great Himalayan Exploration Program, run with UNESCO.
UNESCO, what does that involve?
It's focused on documenting and helping preserve local cultural traditions in the Himalayas. It's an interesting way for a company like Eicher to engage with communities and contribute to cultural heritage, beyond just standard corporate social responsibility.
That is different. And is this sustainability focus getting noticed outside the company?
It seems so. They pointed out they rank #8 out of 85 companies in the global automotive sector, according to MSCI ESG ratings. That puts them among the leaders.
Okay, top 10% globally in their sector for ESG.
Right. And their main Royal Enfield headquarters building has an IGBC Platinum rating, which is the top certification for green buildings in India. So, yes, external validation is there.
So, wrapping up this section, why should all the sustainability effort matter to, someone listening to this, beyond just feeling good about the company?
That's the critical question, right?
Yeah.
For you, listening, it matters because strong ESG performance is increasingly linked to long-term business resilience and value.
How so?
Well, companies leading in sustainability often face fewer regulatory headaches down the line. They can attract investment more easily, and crucially, they appeal more to customers and employees who care about these issues. For Eicher, it's an investment in being seen as responsible, in aligning with future values, and ultimately in being a more durable, future-proof business. It's not just about image, it's about long-term strategy.
Right, it becomes part of their competitive advantage, potentially.
Could well be.
Okay, what an incredibly detailed look at Eicher Motors Q1. Let's try to quickly sum up the key takeaways. We saw truly record-breaking financials, best ever Q1 for revenue, EBITDA, PAT.
Yep. Underpinned by really strong performance from Royal Enfield sales growth, product innovation like the Hunter refresh, that amazing community engagement, and solid international expansion.
And don't forget, VECV, the commercial vehicle side, holding its own and actually gaining significant market share and boosting profitability even when the overall market was pretty flat.
Absolutely. And all of this is happening alongside a very clear and demonstrably progressing commitment to sustainability through that rebalance strategy. It paints a picture of a company firing on multiple cylinders.
And the management's tone reflects that confidence. They talked about consistent momentum, the strength of our overall portfolio, and staying focused on customer-centric innovation, global ambition, and meaningful brand experiences.
It all sounds very positive, very forward-looking.
So it leaves us with a final thought, perhaps. As Eicher Motors keeps navigating this path, balancing its iconic heritage with the push into electric, both for Royal Enfield and VECV, and deepening that sustainability focus. What do you think, for the listener to ponder, will be the single biggest game changer for them? What will really define their success in becoming what they might call a truly timeless business?
That's a great question to leave people with. Lots to think about there.
Indeed. Well, thanks for joining us for this deep dive into Eicher Motors. We'll catch you next time.